Now here's a look at the VIX on each of the days that it went to the upper Bollinger Band and then started to reverse down. So over the past year, here's all of them. You've got January 21st, it turned down from the upper band. You've got February 8th, and so on and so forth, okay? Each day. Now, high VIX means fear in the market, and a high VIX means that the market has been falling most likely. Remember, volatility goes up when the market's going down and people are nervous. But would you have done pretty well buying on each of these days when the VIX was up and then started to spike back down, being at the upper Bollinger Band? Here again, we're using 2 standard deviations. So it just measures the deviations on the volatility, and when you get to the upper extreme, you look to be a buyer when that reverses. So let's take a look. You'd have bought January 25th, not so good. February 8th, pretty darn good. April 19th, that's okay, we got a surge. April 28th, we got a little spike. As we said, we went aggressively short here. May 10th, we got a spike up. May 21st, July 1st, August 16th, August 25th. These are all the dates when the market hit a low volatility. Well, I think you can see that those were pretty darn good at pinpointing extremes. The market did not rally for the next few months in all of these cases, but it did pinpoint many of the lows, many of the bottoms that were set up in the market. And as the saying goes, when the VIX is high, when it hits that extreme, look to be a buyer. Now use it in context with everything else. Up here, we were already nervous about the market. So are we going to aggressively buy into the market? Well, probably not. As we said, we got heavily short. But the point being that when we were bullish here, the VIX supported that trade. When we hit our price target here and we turned bullish, the VIX supported that thesis. When the markets broke out here after the Jackson Hole speech and on a huge bullish candle, the VIX supported that thesis. And even just as recently as the start of December. On this dip, I can remember a few people saying, man, this market, I can't believe it's fallen like this. Are we ready to fall off a cliff? And we said, no, this is the correction. This is the pullback we expected. Run this next wave to the upside. So don't get carried away. Remember that at this point in time, look at the low volatility. Low volatility starts to pinpoint the opposite, that there's too much complacency. So is this market setting up for a correction, a pullback? Well, yeah, when you go up this strongly in such a short period of time, you will have pullbacks and corrections and then new waves to the upside. So in summary, here's a little checklist for you. Talk about sales and EPS growth, growth rates larger than the PE ratio, good GER and bull meter scores, volatility high, know your time frame on your trade, consider other strategies that can be less risky than buying and holding the stock. So covered calls, leaps, naked puts, diagonal spreads, and so forth. Use proper trade and money management. So just a nice little checklist. Some of the things that we put together for the next year to give you a little better view. Here's finally our real-time analysis. Here's the market at about 1260, we'll call it. And here are probably your 4 critical areas over the next year. We're kind of anticipating to end up somewhere in here around 1320, kind of a lackluster year after it's all said and done, but you'll have some violence. Here was the Fibonacci retracement. 1230 becomes an important support. You get through that. 1130 is very important. You can see the head and shoulder bottom here, and that was the neckline that we broke through, and 1020 is critical. 1370 would be an important level. This was a major support here a couple of times in the past, and anything beyond that we can kind of fast forward and look at other areas here as well, I suppose. Right in here would be a very significant level as well, which is basically at 1400 or so in the S&P. So you can get an idea of some critical areas of support and resistance. Pay attention to those in the year ahead. Finally, your trading checklist, we'll post that. As we said, we'll make that downloadable with the video. An email with this recording and presentation will be emailed out to you. Next week, back to a full slate of classes. Advanced Technicals on Monday. This is class 5. We're going to get into Fibonacci's. Essentials on Tuesday, and options on class 205 on Wednesday. As always, we have the daily trade of the day every day, Monday through Thursday, and the trading rooms on the weekend. This weekend's trading room, although it's the first, will be held live. So we'll be live with the core in the trading room. So any newcomers here that haven't had an opportunity to try InvestView, we're going to offer you a 2-week opportunity to try everything out for $9.95. You can simply go to investviewtrial.com to get started. $9.95. You get to try out everything we offer, presentations like this one, trading rooms, trade ideas for $9.95 for 2 weeks. At that point, you can become a member and pay the monthly fee or sign up for a 6-month or 1-year package. So that's our toll-free number. A reminder, our packages, the 6-month and the 1 year, expire at year's end. So basically, we do this every December. I shouldn't say we do it every year because maybe next year they won't do it, but they have for the last 2 years given kind of a holiday offer, if you will. So you've got a couple more days to get that done before the new year. Thanks for being here, everyone. Let me just make sure that we answered all of the questions that came in.
Hey, Corey, I'm not sure if you can hear me.
Yes, sir.
We had a couple hundred questions come in, and Ned and I have been very busy answering, and we basically have every question answered except for Dana's at 8:03, Bill's at 8:04, and James at 8:05. Everything else has been answered. So 8:03, 8:04, 8:05, Dana, Bill, and James, if you want to address those, and we'll catch all the rest of them that come in after that.
All right, so do you think alternative energy will make a run in 2011 as the dollar loses its place as the reserve currency of the world? Well, we wouldn't really anticipate that the dollar is going to lose their place as the reserve currency. In fact, one of the best things for the dollar has been the problems in the Eurozone. So I wouldn't make that leap yet. That may be a bridge we cross in the years ahead, but I don't think we're there yet. What do you think of Brazil in 2011? Brazil is interesting. We find them a little more interesting than China. So China's a consumer, in essence, of many of the commodities around the world. So as commodity prices continue to go higher, that's not necessarily a great thing to be China and such a huge consumer of some of these things. Obviously, the U.S. does as well, but we're not an emerging market. We're a developed market. Brazil produces many of these, which would be beneficial to them. Brazil, however, has attracted a lot of money. So if you're looking at it on a pure, what area is already loved? Well, Brazil, everyone knows about, everyone loves, investment managers, etc. We like to think outside the box and say, okay, Russia has great opportunity. They're not feeling the love on Wall Street. We think there's more opportunity there, but it is still an area that's growing. The emerging markets have more growth and would not fit into that category of the slower growth, as kind of PIMCO is saying, the new normal. You know, even China's still growing at almost 10% a year. What about the cloud computing space? Salesforce, Riverbed, Amazon, and so forth. Citrix. Citrix is actually GoToMeeting, GoToWebinar. That's put on by Citrix. So the platform we're using right now. Out of those, I actually like Citrix the best. Now, any of those areas are expensive, but Citrix looks more attractive to us on kind of a valuation basis. They're a heavily shorted space, but they have tremendous growth. So I don't mind that area as long as you're comfortable with the volatility that's involved there. So Citrix is symbol CTXS. Salesforce is CRM, and so forth. But there's still a lot of growth there. You just get situations where sometimes they can't keep up with the growth. Here's a scenario where, as long as you're comfortable with the volatility involved, you can make good money in those. In fact, F5 Networks is in the cloud computing space. It's one of the top rated companies according to our fundamental screener, the GER score, and has been for a long while. So had a question about VXX. We would not trade VXX. We have tried to trade it before. We certainly would not trade that going forward. So VXX is off our radar screen. We do not trade. We've kind of made it a rule, don't trade futures-based ETFs. That means no VXX, no USO, no UNG. They are terrible assets, quite frankly.
Corey,
Rackspace is in that same cloud computing space. So all of those are kind of interesting on that growth phase.
Hey, Corey.
We had just a couple more, and then we'll wrap up. What will be the market reaction on Korea's tension? Well, not good. It depends on what happens. The U.S. could find themselves in a war with North Korea. It wouldn't shock me, for one. You know, I could see South Korea staging a little, you know, some type of march, and North Korea bombs them, and the next thing you know, there we are. So hard to say exactly how that's going to play out. Not a good thing for markets in general. Obviously, that would be a bullish view on, I mean, if I knew that was going to happen, you'd think that gold prices, for one, would have a tendency to go up. The dollar value would go down, and so forth. Do you think silver and gold should be shorted, or just kind of slower growth? That's a good question. We are playing gold. It's a slower mover than silver, number one, but we will be playing gold probably to the downside for now. Silver has had some relative strength to gold, so pick on the weakling. We would look at gold as a more viable candidate if you wanted to play to the downside. Now, having said that, neither one of them have broken into a downtrend. You get a move below the 50-day moving averages and so forth, now they can really pick up some momentum. So right now it's kind of, they're in a sideways base. You're trying to play for downside movement that you anticipate, but it is a little bit against the grain, admittedly. So as with anything, you've got to have your stop and you've got to have your protective measures. Where can we find a list of weekly options? That would be at cboe.com. CBOE is the one that will make a new list. They'll report every stock that has weekly options, and they'll update that list every week. Okay, I believe that is it. So if there are any additional questions, pardon me, one other, which stocks in sectors and industries that are advancing in growth of technology on the web outpacing on-site computing, movies, TV, etc.? Well, in the technology space, so you have tremendous growth. You can look at places like Netflix. Netflix has been growing tremendously, but then you have to weigh the valuation against it. So we've traded Netflix a couple of times pretty successfully through some butterflies and different things this year. You know, but there are other areas that seem more obvious right now. You know, we're kind of pounding the table on ag stocks, and that unfortunately might cause you to jump into them right now, and they may pull back a little bit. But the point being, look at that as a space that should perform very well through year end. We would think, meaning throughout the entire year. They'll still go through little short-term downtrends and corrections like everything else, but you know, the market, when we started today and we talked about the fads of each year, when we come back next year, we would anticipate that that will be the year of kind of ag stocks and food prices and so forth.